before I start, just a quick personal anecdote. Last time I was on this stage, I was working for a blockchain, or not a blockchain, a core banking provider, and describing a blockchain product we were building for BBVA in particular. And now I'm kind of closing the loop today, so to speak, eating my own food, because I'm going to present what we are doing with this product within BBVA. So the purpose today is to share our experience of building a crypto platform in a tier 1 bank. So it's as you can imagine, not an easy journey. And I'm going to share, well, the pitfalls a bit, and also the lessons we have learned through this journey and this experience. Maybe some words about BBVA as a company. So it's a very large group, as you can see on the slide behind me. So we are a global tier 1 organization, a banking organization. We are present, incorporated in Madrid, and obviously present also in different countries like Latin America and Turkey, where we have very big positions as well. One point I would like to highlight, beyond all the figures you have on this slide, and in particular our profit this semester, which is outstanding, is the level of digitalization we have among our customers. So we have something like 70 million customers, and out of them we have 50 million mobile clients, which is representing 62% of the value we generate. So I think that is very important for us, and it's also very important in the context of digital assets, because we are bringing with digital asset the final, I would say, the final experience to those digital users. They are able to have an end-to-end experience, including also securities. Well, not exactly now, but in the future, when we have digital assets all over the platform, we will be able to provide this digital experience end-to-end. So, starting our journey. So this is. I'm trying to answer this question: why the hell BBVA Switzerland has been looking at blockchain in 2018 or even 2017 instead of, quietly selling products from the catalog to their existing customers? Why in looking at this disrupting technology back then? So there are a few answers to this. The first one is that we were believing already at that time that blockchain is a technology that is here to stay. It was not a passing mode, a fancy mode or something. It was something which was really going to stay in the financial sector, and also, moreover, disrupting this financial sector. So we saw already back then a very strong potential in disrupting the sector. And one motto we had then was change before you are forced to change. So I think it's very important to embrace change before you are forced to do it, because you are in a much better position to do so. Another key element, and this was also mentioned in the previous panel, in Switzerland, where we are based, we have a regulation in place since 2018, or even a little before, which is agnostic to technology, as it has been mentioned. So this is very simple and well defined. So this is very important to be able to develop a new business. You need some certainty, and certainty is killing the business. And in that respect, in this jurisdiction back then, we were having the right conditions to develop a sustainable business. Another aspect is also linked to the DNA of BBVA Switzerland. We are a small private banking entity among a very powerful group, as I mentioned, and therefore we have the agility to embrace this kind of disrupting project. So we were able to make rapid decisions, to be able to size the opportunity which is with the backing of the headquarters, obviously. I'll come to this later. But this is really important to be able to really develop something where it's not a known project in advance, so you have to make decisions, you have to discover new things, and for this you have to have a certain mindset, which is our case in BBVA Switzerland. Another aspect was, due to these considerations, we wanted to position BBVA in the blockchain map, so it was important for the company to be recognized as an early adopter of this technology, and that was also an important factor to enter, because at that time, now tier one banks are talking about entering the market, but at that time we were entering the market. So, and we have now 3 years of experience in that market, so we have accumulated a lot of knowledge and experience over the years. And last but not least, we are a private banking organization, and for us it was also important to bring a new asset class to our customers. Remember, at that time, it was after the ICO boom, and so it was seen as a risky market, but generating a lot of performance in portfolio if introduced in, let's say, 2 or 3, 5% of your portfolio being moved to crypto. This is improving quite significantly your performance. So that was also a way, an interesting proposition for our customers to diversify their portfolio so that they can also enter in this market. So the vision was very simple, and is still very simple. Digital asset is just another asset class, period. So we have integrated digital assets throughout the system like any other asset, and we are not treating digital assets differently. This has some consequences. The first one being that we need to have this incorporated into our core banking system, and this is the case. Our provider has been able to integrate this natively, so we are able to offer access to Bitcoin and Ether from the and mobile banking to the custody. So we have an end-to-end integration, seamless integration, and the reports we are producing for our customers every month is including their Bitcoin, their crypto position, like their Nestlé or Daimler shares. So the main benefit of this is obviously convenience. So they don't need to send money, I don't know, to wherever with cards or money transfers to an exchange they don't know about. They just click on the app and buy or sell Bitcoin or transfer Bitcoin if they wish to. So this is really to make the Bitcoin and Ether or the crypto digital asset experience much painless, I would say, much more straightforward with no question. They are not needing to learn a new tool. They just use the tools and the reports they are used to with the provider they are also used to. Some words about the roadmap. So, as I said, we started this journey in 2018. Obviously, we had rounds of validation with the regulator, with FINMA. We are a Swiss entity, but also with our headquarters to get the green light and explain the project. I'll come to that later. Then we had a friends and family phase in 2021, and then the market rollout. And also what we have done in that period of time was to launch a new gen digital solution. So this is a fully digital experience mostly for affluent customers. And what we are delivering a digital bank with digital onboarding, everything done seamlessly. And this is connected with this blockchain initiative because each time an account is created, a wallet is also created for those new gen customers. So we have a full integration of digital assets within our digital platform. Another important milestone was 2022, where we created the omnibus solution. So it was a little unclear before, let's say in 2019 and 2020, about how to manage wallets. So we had to have segregated wallets due to the regulation. And this was kind of lifted in 2021. And so we were able to create an omnibus account, which is way easier because we can settle trades each day instead of settling each trade. So it's operationally much easier to operate. And it brings also advantages for our customers because they see their position in Bitcoin when they buy or sell immediately, so without having to wait for the settlement to be performed. And currently, in 2023, we are currently working on a technical migration. We are changing the Vault version we operate. So this is happening this weekend. So we are pretty on top of things now to make it happen this weekend. And this is enabling other functionalities, in particular looking at security policies, which are much more granular in our new platform than they were before. So we can address, in particular, the needs of institutional customers, giving them more control upon the policies they want to have in place for transferring assets from to the vault. Some takeaways now from this project. So the first one, and it has been shared in the last panel as well, education is a key success factor. So this is a very new technology, a very new way of thinking in particular, but not only for compliance. And education is the way to break the barrier so that people understand what we are doing. And this was, for example, compliance discovered what was shared in the previous panel, that they see much more with the tools they have to screen the blockchain than what they see on the fiat world. So I would not say that they feel more comfortable, but they see a lot more, and they appreciate that this is really different and giving a different perspective. But this is only through education. Education is a key aspect to make people feel comfortable and decide and adhere on the project. Another takeaway is that, and no surprise, strong senior management support is mandatory, no option there. If this is not backed by top management, there's no progress. No, you can do a POC for sure, but you can never go live because then no one will support the risk or will take the risk to go live with a product they don't understand. So senior management has to be involved day one and bring a huge support to make it happen. And this is bringing me to the next point where banks are, of course, conservative because they have to fulfill the regulation and they can't innovate too much. But there's a balance to be found between innovation and conservatism, and this is important also there to have the support of top management in order to really make the things happen. Another important takeaway is that you can buy technology. That is really easy. What is difficult is to bring people together to operate a platform and to understand what we are doing and supporting this on a daily basis. And this is what we have, the achievement we have made over the years, to bring those people together and really to make it happen and to support our customers in their digital journey. So that is something which is difficult to achieve. Buying technology is just writing a check, so that's way easier than putting this into operation. So now, the next steps for us are developing the institutional customer segment. So we are, as I said, a private bank in Switzerland, but we also see an opportunity, I would say, thanks to FTX, to look at also institutional customers that are interested by the fact that we are a regulated entity, very stable. We have been operating for 160 years. And so this is the kind of trust they require to custody their assets. So we see this as a big opportunity for us to develop this segment. We are expanding our product scope. So currently we support only Bitcoin and Ether, but we want to expand obviously this to other chains and other coins. So this will come after the migration I was talking about. Another development is supporting cold wallets. So this will come Q1 next year. This is obviously a very important feature institutional customers are requesting. And also for our private banking operations, because now we have an omnibus wallet since a few years, it's growing, and we also need to secure a part of this wallet in a safe place, like in a cold wallet. And as I said, we are taking advantage of the new platform we are going to migrate to have more custom design security policies, so that we give more control to our customers about the way coins are transferred from our vault to somewhere else. So to sum up, I would say that life is not a peaceful river, so projects are rocky. There's no exception. Of course, a crypto project is probably a little more difficult than others, but every project is kind of difficult. So it's not because you are facing uncertainty in front of a crypto project that you shouldn't do it, because it's not much more difficult than others. Education, as I said, again, is a key success factor. So people have to feel comfortable to make decisions, otherwise they resist to change. So education is a lever for change. A very bold statement now: the best to get started is to start. So this is kind of an evidence, but you can procrastinate as long as you wish. At some point you need to get started, and the sooner the better, because if you are not starting, the market will continue to make progress, and you will be not relevant or current anymore. So another aspect is to resist to change is saying the technology is not ready. We operate this platform since, as I said, 2021. It is stable. It has significantly improved over time. So yeah, there's no reason why you shouldn't start or continue. And another advice also is that this market is not mature yet. We have seen this regarding regulation. We have seen this also with a lot of new initiatives popping up. So this is raising new opportunities. So even for latecomers, it's also interesting to look at the market now, because there are new trains in the station, so you can still seize very interesting opportunities. That's it for today. Thank you for your attention.